My name is Ruchi Nanji and I'm a chartered accountant. So let's dive directly deep into the financial fundamentals of a company. Today we'll be talking about VAT. Now, we need to understand what is VAT. That is important. VAT is basically value added tax. So whenever you sell or purchase any product, you are paying VAT. If you have noticed, when we are going to a shop, even as basic as even if you go for shopping your clothing items and just, or even a restaurant for that matter, if you buy a Coke, you will see that you're paying VAT on it. If you're buying clothes, you will see that there is a VAT percentage levied on it. The end customers and the consumers are the ones that are paying for the VAT. As a enterprise, as a company, we are just collecting the VAT from the consumers and we are giving it to the government. The government does collect it from us. Yes. So basically, we're acting just as a middleman. So to understand VAT, because you don't want to pay or get 20% is a significant amount. It's a percentage, it's not an amount. And anything that's in percentage, you have to be very careful of it because it is levied on the original amount. So you need to have your accounts in proper shape so that your VAT is calculated properly. And that's where bookkeeping comes into accounts. You maintain your accounts receivable and accounts payable properly so that your VAT can also be calculated properly. Accounts receivables and accounts payables. Why do we need to keep both? Because we are paying VAT on the raw materials that we are purchasing as a company to sell the products that we are ultimately manufacturing or trading and selling the end product that we are also charging the VAT on our final product from our consumers. So, for ease, I have already mentioned that if we purchase raw materials of 100, we are paying VAT of 20. Our total cost would be 120 for raw materials. When we sell our own end products, say for 200, usually that should be the case, okay? So you're paying 20% VAT, that would be 40, 20% of 200. So the end consumer, my customers would be paying 240 to me. So because I have already paid 20 on my raw materials, and I have collected 40 from my consumers, I have to only pay 20 to the government. Why? Because out of 40, I have already paid 20 for my raw materials, which were converted into those final products. Okay. And the second one, when we have purchased, say 200, and again, I've just flipped the numbers. So VAT of 40 to 40, sales I've made only 100. COVID hit, it was a slow month, or it was a seasonal something, or it was just a bad time. So my sales are lower, and I paid VAT and I collected VAT, and my consumers paid me only 120. In that case, you are eligible to get a refund of 20 from the government. So that is why it is important that you make your VAT records very simple and comprehensible so that it's easier to understand how much you're paying or how much are you owing for a refund.